Tax withholding. What is it and why does it matter? Basically, if you're an employee of a company that gets paid through a payroll service, your employer likely withholds some of your income every paycheck and sends that money to the government for you. The reason? Well, it's twofold. On one hand, you don't end up in a pickle at the end of the year when you owe the IRS thousands of dollars. On the other hand, the government gets paid regularly. That way, it doesn't have to wait until April 15th to bring in enough money to pay its bills. Things like the salaries of federal workers and contractors, and Medicare benefits. Here's what you need to know. When you start working at a new company, you should fill out a form for your employer called the W-4. It will ask you if you're single or married, how many children or other dependents you have, and what other tax credits you might be eligible for, like the Earned Income Tax Credit for low-income workers. It will also ask you to estimate deductions you plan on taking this year if you itemize, like charitable donations or a mortgage interest deduction, and if you have non-wage income from investments. The goal is to estimate at the beginning of the year what your taxable income will be. That way your employer can withhold accordingly. The IRS has a withholding calculator on its website. Check it out to get a personalized estimate of your taxes. But remember, you need to fill out the W-4 to actually have the money withheld. If too little is withheld, you'll owe a lot at the end of the year, and the IRS might penalize you, making you pay even more. If too much is withheld, you'll get a big tax refund, but you're basically letting the government hold onto your money all year interest-free. So it's important to try to hit that sweet spot. And if you work for yourself, nobody will withhold for you. So make sure you're putting some money aside to pay that tax bill each quarter.
Invest in you. Ready, set, grow. CNBC and Acorns.